Welcome to Washington in Focus. I'm Cole McNeely. Joining me today is the Center Square's investigative reporter in the state of Washington. You know him, you love him, you read his articles every single day when they come in your inbox. That's right, it's TJ Martinell. Now, TJ, how you doing, sir?
I'm doing well.
Do you feel inspired?
Oh, absolutely. Couldn't have done better.
All right, TJ, you wrote, this is kind of a follow-up story, but there's a story within a story here in the state of Washington, and this has been going on for a long while, this conversation about the state's capital gains tax and whether or not it's being categorized as an income tax. Can you just kind of provide an overview of that conversation? And then there was a lawsuit filed by a Washington couple challenging the one-time tax on the earnings from income from shares in foreign companies. I mean, there's a lot of complexities here because this is a very, in the weeds legal conversation. Can you kind of provide a general overview?
Yeah, so these are actually two separate cases that are going on. The one is at in the federal court that has to do with our state's capital gains tax, and the U.S. Supreme Court is possibly going to announce next week whether they're going to take up the case. This case that they just had an oral argument this week on had to do with a federal tax that was enacted in 2017 as part of the, Trump tax reform packages. And this has to do with a one-time tax on the earnings from U.S. residents that generate income from shares in foreign companies. And so what they did is they invested in some company based in India, and over time, before the tax was enacted, that's going to be important here. They were investing in the company, and then they had gains that they reinvested into the company without ever taking it out as income. And according to the federal government, they owed them $15,000 as a result. And the couple is arguing that they do not owe that money as part of an income tax because it wasn't income because it wasn't realized. And that is the central focus of their argument.
It seems like this whole challenge, I guess is what I'll call it, it seems to really hinge the lawsuit on the interpretation of the 16th Amendment. Is that fair?
Yeah, because the 16th Amendment is the one that gave Congress the authority to impose income taxes without apportionment. And the question is whether or not, what is income? And it's the same question that's being asked, that could be asked of our state's capital gains tax, as far as, whether income is property. And this is asking what is income? Does it need to be realized or can it be unrealized? And what the couple is arguing and their legal counsel is arguing is that this is actually a property tax. By taxing unrealized gains, you're imposing a tax on something that people own, not something that people earned. And so property taxes have to be done with apportionment, whereas income taxes do not have to be done with apportionment. And that's why they're saying that this tax is effectively not constitutional.
And for people that may not know, essentially, right, unrealized gains, or if you have something, you purchased it and you have not sold it, but there is a increased value on it, right? So if you bought in a stock at $5 and now it's worth $10, well, you'd have $5 of unrealized gains. It becomes a realized gain when you actually sell that and you have the cash in hand, which is that's an interesting discussion to have, because obviously there's been all sorts of politicians out there that want to tax unrealized gains. This is an interesting thing to see how to play out.
Yeah, it actually reminds me of a scene from the movie The Wolf of Wall Street, where the two Wall Street brokers are talking about this idea of them making money rather than their clients. And the one head guy is saying that their clients will invest in something and then the stock goes up and they'll want to cash out. And the idea is to convince them to reinvest because, he's saying they get rich on paper, but the broker gets commissions on that reinvestment, and that's actual earned income. So he's effectively comparing their wealth, which is income, compared to unrealized gains. Because if you have a stock that's worth $10 and you paid $5 for it, well, it's a $5 in unrealized gain. But if there's a crash tomorrow, it could go down to $2, and then you've lost money. And so, this is also how it's different from property taxes. Is, let's say that you bought a house that was assessed at $100,000 in value, pipe dream, but it went up to $200,000. So that's an unrealized gain. Well, the government taxes if they do property taxes, but again, it goes back to it has to be done with apportionment. The 16th Amendment says that income taxes do not have to have apportionment. So that's another part of the a key piece of this legal debate.
The U.S. Chamber of Commerce did weigh in on this as well, and kind of a broader statement about how it would impact business. What did they say?
Well, they were basically saying that the businesses and shareholders could be subject to taxes on pretty much anything the government decides is income, and even if that value goes away or the market changes in terms of values. And so it's going to, one of the other problems is that this law is imposing a tax on income from years before the law took effect. So that's so it's a retroactive tax in that sense. So it could completely change the way that people invest their money or how they do investments, because it would lead to uncertainty, because Congress could pass a law or a new tax on unrealized incomes on pretty much anything. And so you're paying taxes on income that you don't ever actually see or are able to use. So if you have money in the stock market and you have, to use the analogy, you put in $10, you get $30. It's now worth $30. And they posed a tax that, you have to pay money on that. But then the market crashes after you pay the tax. You never actually get the income. Only Congress or the government would get the income.
Yeah, so in theory, you got taxed on day one, crash occurred on day two, you hold your assets and you try to sell them on day two. You're paying on a snapshot of what the asset was valued whenever they decided to tax it, not what the asset's actually valued when you decide to cash in on it. One, how quickly do you think this will get, I'm going to say, resolved, broadly speaking? Two, what are all the different implications that could come out of this?
Well, I have a feeling that it's going to probably be settled sooner rather than later, and because the stakes on both sides, regardless of the ruling, could be enormous. Because if they side with the couple, the government's arguing that it would invalidate much of the Internal Revenue Code. On the other hand, we just talked about what the Chamber of Commerce said. Based on what I saw of the Supreme Court justices' questions and the way they kind of pushed back on both parties, my guess is they're going to make a ruling where they're going to invalidate this tax without having implications for the rest of the tax code. That's going to be but what it's going to be, the reason why it's also important is because there's these ideas of a wealth tax where you tax everything that a person owns. Well, how do you value that? We have tax assessments for homes. So, they could tax that, but then they want to tax something that gets an assessment every single day, every single moment during business hours, which is, stocks and mutuals and all that kind of stuff. So it would just create this very, I'd say, transformative change to how people invest, because they're obviously going to want to invest in something that the government can't determine its value, or they just don't know it exists.
TJ, what a selling point right there. Keep up with this potential transformative change at thecentersquare.com with our investigative reporter, TJ Martinell's reporting. TJ, this is a really interesting topic. And listen, we spent nearly 10 minutes on this thing. This could go on for hours as legal things do.
Right.
But again, listeners, keep up with this at thecentersquare.com. For TJ Martinell, I'm Cole McNeely. Please subscribe, and thanks for listening to Washington in Focus. Knowledge is power, and you deserve to know what happens in your state government. That's why the nonprofit Franklin News Foundation is bringing you straight news journalism through the Center Square, reporting on state authorities and publishing stories that show where your money goes and who spends it. By supporting the Center Square, you can track politicians' use of taxpayer money and demand transparency from elected officials. This is how we can equip everyday Americans to hold their government accountable. Become a supporter of Franklin today at franklinnews.org/donate.